bouncing into spring. I hope you guys had a great St. Patrick's Day. I didn't do anything, not a darn thing. I just hung out with the family here. Actually, it was just me and Eddie for St. Patty's Day. But other than that, I've been following the news, and it has been another tumultuous week in real estate. We still have some banks collapsing, and we're going to be talking about that some more. We're going to be talking about what's going on in the real estate market with buyers and sellers and how the mortgage interest rates have been reacting, which is a little surprising. I'm not going to lie. And what that could possibly mean if you're buying or selling a house, because what I probably am going to say is going to surprise you. Because, everybody wants lower interest rates, but I have a different thought process on this, and you guys can give me your fair shake on what you think I'm thinking, because I know you guys are more than welcome to give your opinions. There is a poll there too. If you guys haven't noticed, on the right-hand side, there is a poll. Please fill out the poll, and we'll get into the poll results a little bit later too. So this week, believe it or not, we have a guest. I had a guest that was supposed to come on this week. He ends up getting COVID. And then, so this is my filling guest. He's also a friend of mine. His name is Travis Madison, and we're going to be talking to him some more. Come on in, Travis.
Hey, welcome. How are you? Thank you for having me on, Kristina.
Welcome and salutations. Somebody put that in there. Greetings and salutations. I do want to know, everybody wants to know where you're coming out. Where are you real estate agent at?
So I'm in Oregon. So I'm in Southern Oregon, the Rogue Valley. So I do the cities of Ashland, Medford, and Grants Pass.
Okay. Or like the Oregon Trail.
Exactly. Actually, the Applegate Valley is like the Southern Oregon Trail. Yep, exactly.
I have never had a guest on from Oregon. I can't think of anybody. So you're my first guest from Oregon.
Yeah. Well, we're pretty cool. It took us a while to get out here via the wagon, but.
So is it Oregon? Oregon?
Oregon?
What? Yeah, there's people that live out there. Who knew?
Yeah, we do. We like it. It's wet.
Do you guys get a lot of people during the from California that moved to Oregon? Is that a popular?
Yes.
That's what I thought.
Yeah.
People are moving from California. A lot of them moved to Texas, and a lot of them moved to Oregon and Boise, Idaho, which I didn't know that until their market started tumbling a little bit.
Yeah. In fact, Idaho actually is trying to take over part of Oregon. There's this whole greater Idaho movement that they want to basically take over part of Oregon so they can have some coast. And I think it's so that they can get the shipping so they can have their own port. They don't like going through Portland or Seattle.
So so they're planning on taking over Oregon so they can have what are they going to do? A great invasion?
Kind of. Yeah. It's like this weird political invasion. Yeah. That's basically what's happening.
That does not sound right. That we do not need any state civil wars. That does not sound good at all. Whoever planned that idea is not thinking clearly.
Yeah.
that isn't going to go well.
All they want is cheap shipping.
Oh, we all want cheap shipping, don't we? I want cheap shipping.
Yeah.
A little play on words there.
Yeah. But anyways, yeah, it's great to be here. And it has certainly been a crazy, tumultuous week is a good way of saying it for sure, huh?
Yes, that is true. Because we had the end of last week, we had a bank collapse. I was freaking out. I was freaking out. Then as the more information came out, because they originally were saying it was tied to mortgage-backed securities. I'm like, that's not good. This isn't good, And then as it all, where the chips may fall, it ended up being that they were crypto bros. And that's why normal people weren't really the regular everyday working person wasn't necessarily the ones that were banking there. It was just the crypto bros and the Silicon Valley bros that have their $1 million startups and stuff. So, but they had to pay those regular people. And that's where the payrolls came from. But then another one fell, and then another one fell. I was like, what is going on? But they're all tied to this kooky investment stuff. We have an article that came out about it. Eddie, you want to pull that up?
Yeah.
Eddie's the producer of the man with the plan in the background. So this is amid big turmoil, the housing market. I'm going to pull this over here so I can read it. let me pull this screen over here. It says, amid bank turmoil, the housing market has done something extraordinary. They had to throw in that spicy word, extraordinary.
Right.
While most Americans rarely worry about their bank, and the faith was shaken this week when several, including Silicon Valley, Silvergate, and Signature, went under. Withdrawal runs and stock market chaos ensued, sending ripple effects far and wide. Yet, by a miracle, one facet of the economy that remained astonishingly unruffled was the housing market, which even showed a glimmer of good news. Namely, mortgage rates fell to went from 6.6 to the 30-year fixed rate mortgage. This marks the first drop in 5 weeks of a push upward that crested at 6.7. So this is the thing. Like, I was reading headline after headline, like there were like mortgage interest rates are tumbling. Like, watch them fall apart. Look at how mortgage market rates are just. I was like, it's not that much money. It's not in the fives, but whatever. Okay, let's go on with the article. Plus, home buyers who are bracing for another hefty rate hike to hit next week, when the Federal Reserve meets again, may instead of find some relief. The Fed, after all, might be more interested in the short-term instability in an economy rocked by recent bank craterings rather than taming inflation. They don't call it taming inflation. You know what their word is? They're going to tamper down.
Tamper, yes.
That means mortgage rates might actually fall further. I've been saying this year they were going to be in the fives. I'm still saying it. And rates aside, other housing market indicators were remarkably stable this week. Chief economist Daniel Hales notes in her most recent analysis. Here's what the latest statistics mean for both home buyers and sellers, and our latest column, how the market was. Well, we're not going to get into their market. We're not going to get into their market trends. We're talking like real people here.
Yeah, totally. Yeah.
So what do you think about this? Do you think that I mean that they're saying market, interest rates tumble just a scotch, but I mean they were making it sound like it was this record amount that had gone down, but it really was barely a blip on the screen. It wasn't even a sneeze that you would throw a tissue away. Do you think this is gonna, when the Fed meets, do you think it's gonna make the mortgage interest rates drop even more?
Well, it seems like it's poised to anyways, because they're either going to, well, they got to do something with these banks, right? Like they came out with that Silicon Valley Bank, and it's not like a bank that you or I bank at. Like it's a bank where 90% of the people, I think was the number I heard, 90% of the people have over that $250,000 in their cash. I mean, the Silicon Valley is a different world. Like it's a whole.
They were crypto bros. They were the crypto bros. They're like, oh, NFTs, man, crypto, this is the wave of the future. It's going to save the planet. Well, it's like literally causing so much drain on the electrical grid,
Right. Yeah, it's true. They had a lot. Yeah,
there was a lot of that kind of stuff. A lot of startups, angel investing stuff, that kind of thing. And that, but when the articles first started coming out, they kept saying they had invested in mortgage-backed securities that weren't giving them the return on investment they had originally anticipated. And so I was like, like, I mean, that was deja vu, that I was like, that's not good, but that's not where all their money was tied into. It was a lot of just poor investing, and that it wasn't, those banks weren't being regulated and like normal banks.
Yeah. Well, I was watching on Meet the Press this morning, which I don't usually watch, but I like.
Oh my God.
Do you like
that
him
is
sometimes?
Like a cesspool of
But they were talking about
make yourself mad, watch Meet the Press.
They were talking about the deregulation in 2018. And that probably played a bit of a factor in it. But the fact is, when they came in and they said, because like if you and I had an account at a bank, it's only good for $250,000. So a lot of these people had way more than that. And when they came out and said, "Oh, we're going to make it all, we're going to we're going to make sure that you have your money. Like, that's like, okay, we're going back to printing money again. Like, let's put the money printer back on burr.
That's the whole thing. It's like, what's the right answer? Because you don't want people to like literally be on the streets because like, you never really think about leaving your money in the bank as a chance, like you never think of that as like a liability. My great grandparents did. They were like, always put money on their mattress, and I always thought they were crazy because they, like, when we took out their house, we had to open up encyclopedias and shake out all the books because they had money stuffed in the encyclopedia. In their jackets, they had money sewn inside their jackets. Like, and I'm like, what were they doing? Like, to me, that was, crazy. So we never look at banks the way that our great grandparents did, like there's always a chance that all your money disappears. And I think that's where that kind of comes from, is that, these people, do you let them fall apart? Do you let it go to,
Yeah, it's hard to imagine, although, yeah, Johnny O.
Thank you, Johnny O, for the $100 super chat. I appreciate you. Every week he comes in and drops in and gives me a lovely surprise to keep these live streams going. I appreciate you very much. Thank you so much.
Yeah, Johnny O, that's awesome.
I wonder if he's got his money in a bank. This is we're talking about that. Yeah, you just don't think of it as a liability,
Yeah, you're right. That's like my, my parents and their parents. You're right. They keep money in the safe in the house, and they barely trust the banks. And we've been through this before. I mean, it happens frequently. It seems like back in the day, before it was a recession, it was called a panic for a reason, because people panic and they freak out and they're like, uh-oh, we heard that our bank doesn't have any money. So what do? We all go and try and get our money out.
Yeah, you rush the banks. But that's why the insurance comes about anyways. But I mean, like, I know that these specific banks are different than the traditional, like, everyday, Wells Fargo type banks. Do you think this is a catalyst to something bigger? Like, this is just the first, like, crack in the dam kind of thing before everything starts to fall apart? And how would that affect the housing market?
Yeah, well, that's a great question. So in reading about the Credit Suisse, which just did this UBS, so the largest Swedish bank just took over the second largest bank in Switzerland. So that's like, whoa. But I guess what's interesting there is, if you think about it, if you're number one, your business is going well. Of course, you'd like more of the market, but do you want a bank that's falling apart? Like, do you really want? So on one hand, that's essentially what's going to happen here, is Silicon Valley Bank is going to be bought by somebody else, or the Fed is going to say, all right, Wells Fargo, you now have to run Silicon Valley Bank or whatever. And so on one hand, I can empathize with some of those banks. I know that's hard to do, in terms of they're taking up these bad assets. But on the other hand, we're going to end up with only like 5 banks if it gets really bad, so that's not great.
No.
And that's not,
but you still have your credit unions. You'll still have your credit unions. You'll still have your, there's still going to be different types of banks. But you're right, though. Every time that, like, more and more of the small town banks get scooped up by the big name ones, that isn't good I don't think it's good for an economy. I don't think, like, we're slowly but surely, we're all going to be owned by one person. Because what the funniest thing is, people say, well, it's Vanguard that's going to own and everything. And I'm like, then it's a BlackRock that's going to own everything. Well, do you know who owns the most assets of BlackRock? Vanguard. Do you know who owns the most assets of Vanguard? Is BlackRock. So they're
like this.
Yeah, they're literally, they're just hanging out with each other. They're bed buddies. They own so much stuff. They have such high shares of a lot of these companies, and they're the ones that are going to be owning everything. It kind of reminds me of that movie WALL-E. Remember WALL-E?
Yeah, totally.
Yeah. And they're going to be like, everybody's going to have a package that comes to the door that used to be Amazon, but it's just going to say BlackRock, and it's going to be delivered by a robot.
Yes.
But,
you're not wrong.
They weren't wrong. I remember watching that movie going, oh, what a sad story. And then I keep reflecting back on it. And I'm like, Art's imitating life here.
Right.
It's like that movie Contagion. I'm like, that happened exactly the way they said it would in Hollywood. And then you're kind of like, wait a minute, how did they know all that? That's my conspiracy tinfoil hat stuff. I have one of those over here. If I really wanted to
Yes.
go down the hole, I can put it on. Prime Sister has a question for
Yeah.
you, Travis.
Uh-oh.
What asked before about the termination fees, completely separate from the earnest money. We made an offer on South Carolina contract and had a non-refundable $100 fee for the TE seller wanted $1,000. Have you ever heard about this?
Well, I know in the contract in Oregon, you can write it in that, if for any reason termination, that you have to, forfeit some money, basically aside from earnest money. But it's very uncommon. Even when we were doing like waiving every contingency and overpaying for homes, and like even in the crazy market, I didn't see that at all. But I do know it could be a contract provision in Oregon. Yeah.
Ours would be an extra addendum, to the contract that it was negotiated. And I've had to do that one time because the buyer just kept coming through the house and asking all these crazy questions. And it was really driving the seller crazy. They're like, either buy the house or you don't. So then they finally came up with an offer. And then we went through this whole negotiation process because the first offer that came in was absolutely terrible, stupid, ridiculous. Then they finally negotiated a price, but on the condition that if they didn't follow through with the sale, that they had to pay the sellers $5,000. And it was just a separate addendum to that. But yeah, they can do that. It's not that it's illegal. If everybody had negotiated that prior, yeah, they can do it. They hit. This is a continuation to that same question. They hit send too soon. The contract had a $150 termination fee. The seller wanted to change it to a $1,000 non-refundable fee if we backed out for any reason at any time. They can. I mean, you can. It's part of the negotiation process. They negotiated. They know that it's $150. They wanted it to be $1,000, and they were just negotiating. During that negotiation process, you could say, no, I don't agree to those terms. Yeah, but I mean, they can technically do it. That is correct.
Yeah.
Anything can be done in an addendum, just about anything.
Yeah. The general addendum is very, it's a very, very powerful little blank form. You're right.
Yeah. And all mistakes can be cleared up with an addendum too. I've had my rear end saved with those, not gonna lie.
Yeah. True.
People not signing stuff on time or whatever, it all gets cleared up with an addendum.
Well, I hope whoever it is, they're not going to terminate. I hope the house is amazing, or property or whatever you're buying. I hope it turns out to be great and there's no cause for alarm in terms of the termination fee.
Yeah. Yeah. Like, and you have to look at your deadlines too, because you may want to see if you may be paying $1,000 plus if you didn't make your deadlines, you might be losing your earnest money depending on how your contract is read. So be aware, sign things on time. That is one of those things that they're like, I got time, I'll do it later. Oh, no. Not with real estate contracts. You gotta stay within that time.
Right. And read your contracts.
Yep.
Yeah.
Island Nights has a question. It says he has a question. He did with a W. He has a question. What happens to existing mortgages if money becomes worthless in hyperinflation? Those who have a mortgage, you're contracted to purchase it. And if you look at your mortgage agreement, I mean, every word of that, if you just break down all of those papers, it says, if you don't pay, we take it away. That's what all of that means. You don't pay, we take it away. No matter how worthless the money is tomorrow, you agreed to pay it on this day. And if you're not going to pay it, the bank will take it away. What do you have to say there? Oh, that sounded like a rhyme.
I would say actually, so one thing that we're seeing is assumable mortgages are coming back around.
Yeah, that started last year. Yeah.
Yeah. So it's like, now it's in the marketing remarks where it's like, hey, there's this property has a VA loan that's assumable at 3.9%. So there's actually some value, I guess, in that. So I don't know, maybe, your mortgage, your note that you have might actually have some value right now. It's kind of weird. That's an
But
interesting
the jeopardy of that, though, there is a jeopardy to an assumable loan. Let's just put it this way. Let's just say the loan is assumable and they have a 3% interest rate. But they've lived in it for so long, they only owe $100,000 on it. They're selling it for $300,000. Now you're going to come up with $200,000 to cover the cost or whatever. Like you're going to cover the extra, you know?
Yeah, you got to
So,
buy out the equity. You're right. That's a great point.
yeah. So, just because it says assumable, don't think you're like you won the lottery and you're swimming in money like Scrooge McDuck, you know?
Yeah.
You know what I'm saying? Like you got to be
right.
careful. There's always
Yeah, but that is an interesting thing. So, okay. So talking about mortgage rates, if mortgage rates go down, like say they quickly go down, what do you think is going to happen with the market?
Okay, this is what I've been thinking about. So the Fed has said many times that the way that they are planning on tampering down all markets was to tank the job market, which hasn't been working. Like every time they turn around, the job numbers are up, and it's frustrating them. And so they're coming up with different ways to make sure that people get laid off or don't get hired. If interest rates continue to go down, and the job market turns to the negative, most people aren't going to be able to afford a house. They're going to be too scared to move, basically. So then you have an influx of homes that need to be that will become on the market. Will those be the affordable homes? Who knows? The actual like McMansions have actually seen a decline in price recently. So I mean, like I had said that was going to happen. The most affordable homes are what we need on the market, and if the only people that can afford it are going to be corporations, we're going to be in tough shape because they love cheap money. So if they have cheap money that they can now mortgage, which they will do, they will continue to buy the most affordable houses across the United States. This market is completely different in 2008 because we don't have the supply of homes like we had in 2008. And the players in the market that are buying houses are completely different than they were years ago. They keep downplaying on how much corporate investors actually own and have been buying for the last several years. They keep downplaying it. They've been reporting the same numbers since 2017. And we all know we're not idiots. You own a lot more than that. And they're not going to stop because they know this is a cash cow. They have been marketing to younger people for the last, 5 years that a home is a hassle. You saw what happened to your parents in 2008. You don't want that to happen to you. You will have the convenience of going to be able to move wherever you want to go, move whenever you want to at a drop of a dime, just rent with us. And it's working with some people. And in other places, they have no choice because there's nothing for them to buy, even if they could. Yeah. It's already been bought by, Mr. Landlord. And there isn't anything affordable in the area. So they have no choice. They have to rent. And, you think the Tricons in the world are crying or shedding a tear over that? Absolutely not. Think Warren Buffett cares? No, not at all.
Yeah, totally. Yeah. Interesting point. It is. And is that right? I guess I should say that is, a real concern because the investors are going to be the ones who have poised themselves. They're going to be poised to do that. And, normal people, if you will, are going to be worried about their job. They're not going to want to go out and get into a mortgage.
That's what happened in the last housing bubble, right?
Yeah.
There were plenty of people that could afford a house. They were just scared. They could afford a house. They had the credit to buy a house. They were a perfectly stable job. They had enough money, but they were scared because they were afraid it's going to go down even more. And what if it's going to be like the Great Depression? And they were worried that, nobody was going to have a house, like where we're going to be eating in bread lines. I mean, that was the thought process for some people. And so they were scared. The market was stagnant. I mean, I remember sitting there one day and I'm like, that phone only rang 3 times. It was scary, Yeah. So, and then they enticed people with money to come back and buy, here, we're going to give you $6,000 to buy a house, get these houses off the market. But that was different because we had houses to give to people. We have nothing. We have no supply of homes. There's just not enough. Yeah. Ravi Venn that says, we ask you a question? While interest rates have not been dropping, real estate prices have not been dropping. People standing in the queue, where can the market take us? Any thoughts? And that's basically what we've been covering. What do you have to say there, Travis?
Yeah, it is interesting. I've had people, so a young couple that I've been lucky to help in the last month or so. They were kind of on the sidelines and they were waiting it out, and they were like, "We're waiting for prices to drop. We're waiting for prices to drop." And they finally said, "Screw it. We just need to get a home. Like, we need to get a home because we're noticing that there are not many opportunities." So they came off the sidelines by themselves, because they were like, we just need to make a purchase. I think to some extent, it's time in the market for them more than timing the market, which for them makes great sense. But for some people, prices are at such a place that you can't, their prices and interest rates have essentially priced them out of the market.
And that is the problem. And I've been calling and sounding the alarm since before the pandemic, because we had this issue prior to the pandemic. It's just more in your face now that we don't have enough affordable homes. Those little starter homes, we just do not have enough of those houses, and they haven't been building them for 10 years. Very small amount of those homes that have been built for the last 10 years would be for those first time home buyers. They're building those big mansions, and look what houses that now are coming down in price are the big houses, because we have plenty of those. We have plenty of McMansions, but we don't have enough of the smaller houses. One of my friends in New Jersey and another friend up in New England, those houses that are on the lowest end in their area are still to this day, and just recently started going crazy again with bidding wars. They have a bidding war, and there they are trying to help this young couple with their new baby find a house. And then they're sitting there going, this was supposed to end. Here I am, I'm fighting with 13 other offers, to get into a house for this young couple. And nobody likes this market. If you think real estate agents are like, yay, this is so much fun, we hate it. You know what we like is be able to find a house for our clients to purchase, to sit there week after week and have to fight with everybody and not get even at the table to negotiate. My favorite part of the real estate transaction is getting everything I can possibly get for my clients. I love a good negotiation at the end where I'm like, I won.
Yeah, totally.
That was good. Yeah. And there's been none of that for several years. It's kind of like, all right, I will remove one pinky just so they can get the house, but not the second pinky.
Yeah, well, it started to happen again a little bit. It was just starting. Right. And then you're right. If rates come down, so in our market, affordable is under $300,000. And the people who live in those are, they're baby boomers, and they're staying in their homes. And some of them, it's because they're like, well, where am I supposed to go? What am I supposed to do? If I sell this house, am I going to live in a mobile home park where I have to pay $900 for space rent? Or they're not going to have enough proceeds to get into, one of these super fancy facilities that's $5,000 or $6,000 a month.
That's what I was just about to say. So like all these articles, where's the silver tsunami? Because that's what they were talking about. The silver tsunami of houses that were supposed to come on the market. The baby boomers were supposed to give up their homes and let millennials and zennials be able to buy their houses. And they're not doing that. Well, the thing is that even for some people, they're like, okay, where am I going to go to? Because I can only sell my house in Oregon for $300,000, but I really want to move, where my friends are at in Miami, but this same house is going to cost me $670,000. I can't afford that. Or I can go to a home healthcare facility, and that's $6,000 a month. Or I can hire a local nurse to check on me, every other day. Well, I just think I'm going to hold on to it and hire a nurse, because home healthcare in-house stuff is so expensive. And then the way that they have it, if you guys have not seen the way they have it set up, you basically, when a person of age walks in there, you're handing them over everything you own until they dry out everything, your mortgage, everything. You're handing them everything until it completely runs out.
Yeah.
And it belongs to them. And they charge you for sneezing. They charge you for a tissue. They charge you for a cup. It's a racket, but there's nothing you can do about it. Where are you going to go? Where are you going to go?
That's the thing, is where are you going to go? And that's keeping some of those, cute little 2-bedroom, 1-bath places that are, quote, affordable, unquote, because these older people are, where are they going to
They have
go?
no
What are they going to do?
choice.
Yeah.
It's not like they're not, but there is a good portion of those same baby boomers that own not only their first house, but they own 3 more houses across the United States. They bought a lot in the last couple of years.
They were smart. Many of them, you're right.
They bought a lot for the last couple of years when the money was cheap. I just think that they're going to I think they're just going to hang on to it and give it to another family member. They're not going to sell it in the future. They're just going to be like, here you go, Johnny. Here's your prize. Graduate of college. Here's a house. I mean, that's a nice gift, but anyways, question. It says FedNow and CBDC getting rolled out by the Fed next month. Are any ripple effects we could see, such as easier lending or having themselves mentioned anything in regards to a real estate market? Do you think there's going to be like a softening of lending? The only way I would see that, you can think on it, to Travis, while I spit this out. The only thing I could see with that happening is if there was lack of demand that would cause them to encourage like not as tight of regulations when it comes to lending. But the demand is pent up. We have a pent up demand for the most affordable homes. And it's been like that the whole way through. It was kind of nice there for a hot minute because sellers were reading the headlines and they were getting nervous. So they were willing to negotiate more. But I don't see the banks pulling back on that, as they're still writing as many loans as they've been. In some loans,
Yeah. Well, then there was talk, rumors, I guess, is probably rumors that have been going on forever, but of a 40-year FHA loan, which is like, oh my gosh, 40 years. But don't think that'll ever happen. But,
No, they tried that. They tried the 40-year and the 50-year. The thing is, it's not smart. Like, you really would have to be a complete moron to do that type of loan, because it doesn't save you that much money. It really doesn't save you that much. And you're actually just paying for another 10 years just to the bank and not paying to the principal. You never would be touching that principal for 10 years.
Yeah, pays it up front. Yeah.
Yeah, like that is dumb. Like, I don't know how they could swing that to make it work. It doesn't, like, you look at the amortization chart, it's not a smart move at all. Not at all. But they did that with freaking car loans. Like, you remember you used to only be able to finance a car for 4 years.
Yeah, RVs.
Yeah.
RVs, they did that too. You can get a massively long RV loan. Yeah.
Yeah. Now they're like, I think there's a 6-year loan now on cars. Isn't there?
Yeah.
Is it even longer than that?
Longer. Yeah.
I mean, cars are stupid expensive. Totally. Daring Ride says, just signed a contract on Friday. Ooh. Have the chance to lock in the rate at 6.5. Congratulations for a 30-year fixed rate, or 5.87 on a 10-1 arm. We have a longer timeline. Should we wait to see the rates drop? Your thoughts, Travis?
Okay, so I'm not a big fan of arms. I'm just, my parents went through the arms in the savings and loan scandal of the early 80s.
Yes.
They were part of that. And so they just used to, they've always said, no arms, don't, they've never really told me all the details about it, but but I am a fan of the rate buy down. Mm-hmm. You can do a temporary rate buy down. I'm a fan of that. If you can get the seller, and especially if you can get the sellers to contribute to that. It sounds like you're already under contract, so it might be too late, but and there might be a good chance. Well, you're right. You could always go back and renegotiate. Yeah,
I was just going to say, don't feel like you're stuck. You can always renegotiate when you change loan packages. I've had that happen many times where they were with FHA and then they found out that conventional would have been a better plan. And that's just The sellers don't care. The sellers are like, just buy my house. Is it's going to extend the closing date? No. Okay, fine. And they don't care. Nobody said, well, I thought you were taking an FHA. No way. I'm not selling it to you anymore because you're going conventional. Yeah, I mean, I've never had that happen.
Because those dollars hit my bank account different. So there you go. So try that, my friend. Like maybe talk to your agent or your lender about a rate buy down and see if the sellers can contribute to that. Maybe that's a concession you get during inspections or something.
Yeah, or you can buy down the rate.
Yeah. Oh, you mean me? I'll buy it down.
No, Travis, don't put your own money in that. That's not a good bet. You're not getting anything tangible at the end. You just get your nice guy points.
That's funny.
Mini Art Studio. I'm sorry, Minnie's Art Studio says, do you think that it's best to take money out just for food? For the month, credit cards and utilities, I don't care, but my family has to eat. Do you think it's best to take money out for just food for the month? Or you mean taking it out of the equity out of your house? It costs money to take equity out of your house. Like if you're talking about getting like a HELOC or something like that, you're still going to have to pay money to borrow that money out of the equity of your house. You still have to. There's still a cost to that. I truly empathize. My husband and I, during the last collapse, we were in tough shape. I was a real estate agent. Nobody's buying a freaking house during that time. I had 2 small children. One of them was in daycare because I was trying to get somebody to buy a house. So I was in the office every day answering phones. You gotta remember, computers weren't as big of a deal as they are now. And then my husband lost his job. And we're in a new state and we had no family around us. None. And I'm like, my kids to this day remember where I was like, I could literally make a meal out of 3 eggs, a little thing of milk. Like I knew how to do it, and you make it work. I would have rather eaten dirt than to ask anybody for money. But it's hard. It's very difficult. I truly empathize. And that's why I probably do the channel that I do, because trying to find the most affordable ways to live during that time, it taught me a serious lesson. That's for sure. Yep.
Yeah, and it helps shape you and your kiddos.
Yeah, my kid knows how to, like, honestly, this is not no lie. She actually knows how to, like, we have this big game that we used to play as kids. It's like we would pull out the Winn-Dixie flyer, find out what the deals were, and that's how we planned our dinners for the week. So we would like, this is how much money mommy can spend, and let's figure out what we can buy with that specific money from the flyer from the Winn-Dixie thing. Not only that, like the local church up here was doing something called Angel Food Ministries, where it was like reduced price food. So it was like there was nothing wrong with the potatoes, but they were kind of funky looking, or, like the packaging wasn't like all like fancy or anything. It was totally fine. The kids are always embarrassed by it, but you do what you have to do during that time. That's for sure. I did it. So I'm proud of it. Actually, I'm proud of that. I made it through.
Yeah. Well, and you should be, and it was probably a great lesson for your kiddos, whether they know it or not. They'll realize it a lot further down the road.
I hope we don't have to do that again, though. I mean, nobody should have to go through that again. There's enough money being held by a lot of people that can make all of this go away. And then, like, a lot of this inflation that's happening to all of us is unnecessary. As the CEOs sit there and get those bonus checks, I'm gonna get on a high horse. So I better stop, because I get really mad, really angry. Especially the bank CEOs. They like, even on that bank that just went kaput, what did they do? They gave them all a bonus the day before it folded in. Did you see that?
I did see that, actually, and it's sickening. Yeah, that was sickening.
And Goldman Sachs did the same thing. Like, we gave them all that money, and then all those guys got bonuses and got to go on a yacht after the American people saved their rear ends. Such BS. Anyways, Eric Ming says, have you heard of a rental that has as many applications on management running everyone's credit and the rental going to the highest bidder? This has happened to a friend and she backed out. Yes. And that was one of those things that they said, that the rental market was going to get less expensive because there was more multifamily units hitting the market. And here we are with the new numbers a year later, and it did increase. Rental prices keep ticking up, but there is a glimmer of hope on the horizon, because when they last year dipped out of the residential real estate market, they went into the multifamily unit market. Once those start opening up, you're going to see a lot. If they start opening up in your area, you're going to see rental prices start to tamper down.
Tamper down. Yeah, we've seen actually in our area in terms of the rent. So in Oregon, California, and Washington, I know Oregon and California for sure did major like rent eviction moratoriums.
Mm-hmm.
And so then after the pandemic, as we were coming out of it, it became a 90-day notice which you have to give them, but then they can keep extending it. So we finally kind of reached the end of that.
Mm-hmm.
So we do have a lot more rentals on the market than we did before, which has helped in some regard pull the rental prices down just a little bit. And we're seeing some rental vacancies, as opposed to what was happening was everything would be, people were fighting over rentals. So in our market, we're finally kind of completing that cycle, but we also lost some too, because it was hard on the small time landlords, like the people who own one or two houses, and then they couldn't evict somebody who wasn't paying. That was really hard. So they ended up just selling in order to essentially cut their losses. So we lost rental inventory, and we just recently had some pop back open. So we're
what
pretty
happened to the sellers though? What happened to the sellers that, like, the landlords, like, just say mom and pop landlord, there's this moratorium. Do they not get paid a penny? Did the state give them the money?
Yeah. So the state gave them, I can't remember what the number was. I want to say it was like 80% of what their rent would have been. So like, say for instance, you normally charge $1,000 a month. They give you $800 a month, but it was a heck of a process and it was seriously delayed. So
we were supposed to have done that here. That money still has never been touched. Yeah. Never. We got that money. The state of Louisiana got that money. They supposedly set up this thing so sellers could get, or landlords could get that money. And the process is unheard of. You can't get through it. Like somebody's got that money. I mean, but there's no corruption in politics when it comes to money being given out.
And a lot of them converted their stuff to short-term rentals. So now we're like on the West Coast, several places are doing short-term rental moratoriums, which I think the market's just going to take care of the short-term rental thing. Hopefully. We'll see.
Dawn has a question. She wants to know what you think of their opinion of the commercial side of with all the defaults.
Well, and the local banks too, right? Like in our area, most of the commercial loans are handled, like a lot of the commercial loans that are handled out of local credit unions and mid-sized banks. They're not getting a commercial loan from Wells Fargo or Chase or anybody like that. So that could be really hard, if the contagion spreads, or if we have a problem and then we have local banks struggling to loan money in the commercial area, that could be really tricky. That could be really bad.
But it could also be turned into, a lot of those areas that are zoned commercial could be turned into residential and made into affordable housing for people. You can turn them into condos that people could purchase. Somebody even mentioned earlier, my favorite idea in the whole entire world. I always say, for baby boomers and Gen X, this would be the best way to save the malls. Is the upper levels would be like healthcare, kind of like your walk-in clinics, x-rays, all that kind of stuff. Imaging would be all the medical building at the top, and at below would be condos, of the mall. And then you could even have a little food court there. You have your mall walkers. Remember the mall walkers? Yeah. And I would do all that all over again. You could basically relive your childhood in the mall, but you could have everything that you need currently, which is healthcare and some food and the food court. I mean, that's what they should do. That's what they should do. You had shared with me another article, Eddie. If you could pull that other article that I sent you right before we jumped on the air, that Travis wanted to share with everybody on the channel.
The other thing they're doing in California and Oregon and California is they're taking motels, hotels, and they're giving them money to convert it to apartments.
They did that in Texas as well. They've done that. That hasn't been very successful.
Yeah.
It
But I like
doesn't.
your idea. It's creative. I like it. That's what we need.
It's not my idea. There's a in Rhode Island they did it. Providence. They did it.
Yeah.
I'd love to say it's my original idea, but it's not. So what is this that you're sharing with us, Travis?
Yeah. So this is MBS Highway is this guy named Barry Habib, who's really into market forecasting. And I thought that this was interesting because he touched on near the bottom about the jobs and the fact that there are cracks in the jobs report. It just they skew numbers.
They always have.
Yeah, so it says the BLS reported that there were 311,000 jobs created in February, while this was stronger than estimates. Revisions to the data from December and January subtracted 34,000 jobs in those months combined. And
that makes more sense to me. Because I don't know how many times you open the paper or like open your web browser and look at the news, some tech job, another tech company. Think about all the mortgage companies that because they were dependent on refinance that jump ship. Yeah.
So they're going back and they're looking at it. They're like, oh wait, maybe the jobs report wasn't as strong as we thought. So
that makes more sense to me.
That's kind of maybe encouraging in terms of inflation, maybe.
Yeah, but it's not encouraging to people that lost their job.
Yeah.
While the headline it says while the headline job growth number appears strong, there were cracks in the data. There are two reports within the jobs report, and there is a fundamental difference between them. The business survey is where the headline job number comes from, as it's based predominantly on modeling and estimates. The household survey, where the unemployment rate comes from, is derived from by calling households they see if they're employed. I'm going to say this too. Like, there's another crack in all jobs reports is how many people have just basically checked out. Like, they got unemployment for a period of time, and then they just said, you know what? I'm not even going to look anymore. I'm good. I'm just going to go ahead and be a stay-at-home dad. I'm not even going to look for a job. Those jobs reports I've said for years were nonsense. They're literally a hose. They'll say what they need it to say to make them sound good.
Yeah. Or what about, the people who are going off grid or just whatever they're doing, they're deciding to do their own thing. It seems like a growing population.
Yeah. And the other thing too, is I just don't think there's as many people in the world, in the United States, as there was like 2 years ago. So a lot of them retired, and some of them had some health issues in the last couple of years that we just don't have the same amount of people to fill jobs like we used to. So I don't know. There is a lot of people losing their jobs though, a lot. And I don't know how many times I'm a TikTok person. So I'm scrolling through and they're like, I'm having the hardest time. I've put out 400 applications for a job and I've only gotten one call back.
Seems like it's shifted pretty quickly, because remember we had all those shortages. We couldn't get people in places. Mm-hmm. That seemed relatively fast, right?
Yeah. Yep. Do you know Sir Ashley?
I don't know Sir Ashley. I need to.
Oh my God, you need to know him. I'm serious. He's like the smartest dude I've ever met in my life.
That's awesome.
Yeah, he's super smart. Super, super smart. He's an attorney. He's a real estate agent. He's got his personal investment license. Oh, like he's like one of those people like, oh, I just think I'm going to go become a heart surgeon next week. And he already can do it. He's one of those people. Awesome. Like, I think I'm going to learn a language over the weekend. Oh, look, I'm fluent in French,
Yeah.
He says, thank you for being transparent and never forgetting the challenges you overcame. Absolutely. Oh my God. That is one of the things I learned, working at my first real estate job, is that never stand in a place of judgment, always stand in a place of curiosity. Because I used to say, well, what the hell is wrong with these people? Why will they? And that's my employer, my boss, my broker told me that. And I was like, that's the dumbest thing, but it was sat in my head for a long time. And I was like, then once I had the poop hit the fan for me, I really started taking a look at that, because I had to bring my kids up to the free clinic, to get their vaccinations to go into the school year that year, and how I was treated and everything. And I'm like, I'm not supposed to be here. Like, and then I realized, yeah, you are supposed to be here because you're broke. Girl, you broke. Like you're broke and you're gonna have to deal with this. And this is what your life looks like now. So I will never, ever, ever, ever look down my nose at anybody ever again in their situation. You just never know what brings people there. Ever.
Yeah, no, I remember. Yeah, I had similar experience where I went grocery shopping for the week and had to, have modest little cart of groceries and got to checkout and did not have any money, did not have the funds to pay for the groceries. That was humbling. And they had to, and I looked at my bank app and it's like, oh my gosh, okay, I guess I have to leave these here and just walk out of the store. That was a tough moment. I feel you.
Yeah, but then you have those people that you don't know that see you're in that situation, then come in and swipe their card, say, don't worry about it. You don't know them from Adam.
I've done that now. I love doing that. Yeah.
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 Little payback time. Yeah. Killian Ones has a question. How will this affect one's mortgage if their mortgage is connected to one of the banks that first collapsed? I know the answer to this, but do you want to answer?
I don't think it will, does it?
No. So they just take that mortgage and they just move it to somebody else. They just pluck it from one bank. Because think about the collapse of the last housing crash, right? They just sold those mortgages to another bank. They just took their mortgage debt, and brought it over to another bank that was willing to buy up all of that mortgage debt. That they just sell it off. Doesn't mean your mortgage disappears. At that time, I was kind of thinking, oh my God, so if this bank that owns my bank, like they fall under, they go bankrupt, I won't have to pay my mortgage. Wrong. Wrong. I was so hopeful, man. I didn't know. I was so excited.
Yeah. I had friends when the whole pandemic started and they were like, oh my gosh, maybe they'll forgive everyone's debts. And maybe, and I was like, I don't know if I see that happening. I don't know if I'll see that.
Well, I was very pleasantly surprised, though, that they decided to tack that on to the end of the mortgage instead of making them all refinance. Because when that all came about and they were like, okay, well, we'll do this deference of payments. I'm like, what does that mean? Does that mean after the 3 months is up that you owe the 3 months, the back 3 months? Because that's what they had done before. You could take a deferment of payments, but that just meant that once those 3 months were up, you had to pay all 3 months that you didn't pay to them at that moment. But no, they just like, no, we're going to tack it to the end of the loan. It's like, well, that's kind of nice. And that isn't normal.
Right.
That's when I started really getting nervous. I'm like, are we all going to die? Because this really feels like we're really going to die because banks aren't nice. I think we're all going to die. I was like, don't get me wrong. I was a little panicked there at the beginning. Don't say you weren't.
I was too. No, I was too. I was grateful that I lived kind of out in the middle of the woods, when I was like, but there were some moments. I was like, wait, well, this is freaky. It was freaky.
Yeah, it freaked me out. I was like, this is the start of a movie. This does not feel real. I remember waking up in nightmares, sweats. Like, oh my God, I kept opening the door. I'm like, when do those zombies start? We're just waiting for the zombies. At any moment, the zombies are going to start. Donna says, I own my own home. I own my home. It's fully paid for. Congratulations, Donna. That's amazing.
Yes.
And I want to buy a property. I don't have cash, but I still have to work for a few years. Should I refinance or try to get an equity to buy? What do you say? Travis.
I think that's a real tough decision. You'd have to kind of look at what you're looking to buy. I think you'd want to know, if you do a cash out refi right now, I don't know. Right now doesn't seem like a great time to do it. But I do have a neighbor who's done it recently, at elevated rates. I guess I'd want to know what is a few more years? And what does that look like? And maybe can we find something owner carry or, I don't know. What's your take on that? Curious.
It would depend on my age, right? So if I was close to retirement and I owned the house outright, I don't know if I would take any equity against that house to buy another house. I would, if it was me,
Mm-hmm.
I would create a company, and then I would buy that rental unit or whatever property I wanted to buy under the company name. So that way, if the poop hit the fan, I wouldn't be liable and lose the house that I live in, you know?
Yep. Smart.
But that would depend on my age. Like how willing am I to risk it, you know? I'd have to talk to a financial advisor or planner and talk about all of my investments as one to see what would be the best decision for me at that moment.
Yeah.
I would be a little nervous if I'm getting to the end of my life, you know, and then the poop hits the fan and then I'm stuck and the bank now owns 2 properties when I actually owned that one outright, you know?
Yeah. Or especially like if you were in transition and you didn't have one and the other one wasn't done or something like that, that could be, yeah.
Exactly. Makes Kristina nervous.
Yeah, that would make me nervous too.
Yeah. But talk to a financial planner about that. That's what I would do. Because I don't know I don't have a spreadsheet of your life. So I really can't make that decision for you. No, I'm not trying to be funny. I'm being serious. There's so many different factors that can.
You're right. It's huge. Yeah. When you start thinking about it, it's massive. Yeah.
Yeah. I'm just curious to see what's going to happen next week in this housing market. I like every time I open the paper, they keep saying one thing. Like if you want the housing market to collapse, you can find 5 articles that were put out last week saying the housing market collapsed. If you don't want it to collapse and you're looking to sell, you can find at least 5 articles saying lower mortgage rates mean best thing for sellers. You know, this is the crazy. I've been saying this for the last 3 years. I'm kind of tired of saying it. This is the craziest real estate market I've ever been in. And I was in 2008. At least we knew what was happening and we could understand what was happening and how it was going to work itself out. You know, there was a clear picture on the wall of what we were facing and what it was going to take to get over that. We have no idea because there's so many different players in it now. And then it's so crazy to me.
Do you think too, the speed of information too? Cause like now things are like boom and then reaction and then boom. And then like things shifting so fast or no?
Yes, because Eddie and I were just talking about this. Like, news stories they're just stories. They're making up half of it. You know, it's literally not even a story. I shared something on here last week about Boxable. If you read the story, it wasn't even a story. It was just a bunch of guessing and kind of making things look worse than they really were. And it was kind of a gross article, if you want to be honest with me. Yeah. I mean, the whole thing was like, why does that even matter that his girlfriend works for the company? You know, like it was just a weird article to paint them in a bad way. So I don't think whenever we're just so hungry to be first with that information, it doesn't matter how wrong you were when you were the first one. You were the first one. And that's how they always are now. It's strange to me. Yes, I think the speed of information has made things a lot worse. Yeah. Lexi Cal Gap has a question. We bought our first home in 2019 and have accrued $100,000 in equity. Congratulations. Yeah. We are thinking of getting an home equity loan to buy another property. How much negotiation power do you have being a cash buyer? How much negotiation room do you have in Oregon? And I'll give you my opinion on that. Go ahead, Travis.
Yeah, it's huge right now. Yeah. I mean, it's because there aren't as many as there were, right?
Right.
Cash buyers. So what was happening here was, you lived in San Diego, you bought your home in 2016 or whatever, and you sold in 2020, 2021. You made $700,000 in equity or something stupid. And then so you take that cash and then you would come up to Oregon, you would buy 5 acres and start a homestead. Like that's, right. We saw a ton of that. Right now, we're not seeing a lot of cash offers in the market. Now we're seeing FHA 3.5% down, and we need $23,000 in closing costs. Like right. That's what we're seeing. So you come in with a cash offer, it's going to stand out. It's going to be pretty sweet. And especially if you can do a quick close, sellers are, going to jump all over that right now if there are places on the market.
I have a question back for the person asked the question. Why would you want to take all of your equity and buy it cash? That's just out of curiosity.
Yeah.
Like if it was me, I would only want enough cash to be able to get a loan, because I would want to hold right now with the way things are going. I would want to hold on to as much of my own cash as possible. Like, just think about that,
Yeah.
There's so much uncertainty in the markets, all markets, real estate or otherwise. I don't know. I just think it out, weigh it all out before you decide that you're going to take all of the equity out of your house to buy another property.
Yeah, totally.
Yeah, and talk to a financial advisor.
Yes.
Yeah.
A smart one.
Question. I have bought a home before and now looking to purchase a duplex. Oh, that's a good idea. That's owner occupied. Can you give an advice on what you should do to look for that's different than when I purchase a single family home? Is there any advice that would be different for a duplex? Okay,
yeah,
go for it. Travis.
Just a little bit. So make
Okay.
sure you make sure you pay to have both sides inspected.
Mm-hmm.
And you want to report on each side. And it can be tricky if there's, tenants or whatever, here in Oregon, you have to get their permission. They need 24-hour notice and blah, blah, blah. It can be a real pain, but get both sides. Don't assume that, the range oven is new on this side, so it's new on, don't assume anything. And look at them both like completely separate things.
Mm-hmm.
And the other piece of advice I guess I would give you is, if you can, move into the one that's in the worst shape, rent out the other one for as much as you can, then fix the one you're living in, switch sides, go into the other one, fix that one up, because once you fix that first one up, you can rent it out for more. Yeah, I wish I could do that. I wish I could do that over and over again. FHA, you can do one every 2 years.
Mm-hmm.
I wish I could move the whole fam into a duplex, live in one side, and pick up and move, and have a series of duplexes. That's So that would be the big piece of advice I would do.
Yeah, and during your inspection period, go ahead and get insurance quotes right away, immediately.
Yeah.
Because that surprises people all the time. But they're like, oh, it's just a 3,000 square foot house. Nope, totally different when you have a duplex. So make sure you get those insurance quotes as soon as that house is under contract. During that inspection period, get those quotes immediately. Yeah. And if they have any, if they've done anything to that house, make sure you find out any kind of permits that have been pulled on that house. Because sometimes some of the houses, like in New Orleans, it's kind of common that people would have a duplex. They would turn it back into a one house, and then they would turn it back again into a duplex, because that's what it was originally. So make sure you pull all the permits that they had, or go research them, make sure that the proper permits were done on that specific house. So that way, when you go do something, it's not going to become a problem. Yeah. Always
Cool.
check the insurance.
Totally.
Yeah. Insurance could be a deal breaker. Somebody said. Diamond Rush Media has a question really quick. It says, how does one state a buyout on another using a Idaho or Oregon situation? How does, that was from earlier.
Yeah. They're not trying to buy him out. It's okay. So it's Southern Oregon has an interesting little tidbit. Southern Oregon and Northern California. So the state capital in Oregon is in Salem, and then in California, it's in Sacramento. So Northern California and Southern Oregon have always felt like nobody cares about us, right? Because they're kind of in a no person's land or whatever.
Mm-hmm.
So there was a push, actually, right before the Second World War, where they were going to split off and make their own state called the state of Jefferson. And they were literally ready to barricade I-5, which is the main artery over here. They were going to barricade it. And then the day before, Pearl Harbor happened. And so they were like, we need to drop this.
Yeah, let's not do that.
Yeah, we got something more important.
Bad timing. We'll pick this up later, guys. This wasn't a really good time.
But a bunch of the counties here and in Northern California have passed these. They're kind of meaningless resolutions, but the population, the people in the counties have passed these resolutions saying they're in favor of the state of Jefferson. Well, Idaho kind of picked up on that. And so now they're doing these greater Idaho resolutions, where the counties are basically voting for these things. And
I think they're poking a bee's nest. I think this is a really bad idea.
Yeah.
I'm not that I know anything, but I just say, ugh. I do want to, I don't know if you know anything about buying land. I know you do, actually, Travis. Travis is going to be working on some videos about purchasing land, so you're going to want to follow him on YouTube. But my friend Cheryl's saying, I always recommend this book. She has the 10 things you didn't know about buying land. She's revised that book, and she's even made it thicker. So there's 10 more things that's, more detailed.
Oh, cool.
And if, as a matter of fact, she credited me in the back of the book to say thank you.
Oh, that's very kind.
Yeah. Yep. Cheryl said 10 things you need to know. So this is the newest version. This is edition 2. You guys need to get it. She's a good friend of mine, and I was very thankful. She was like, I saw this little sticky note there, and I was like, oh, my name is in there. Oh, how nice. It was so nice. Thank you, Cheryl. Yep. V-Man has a question. I hear in some states can build homes, say, around $200,000, and other states, same home or around the same size for $450,000. Is it the labor costs or materials or price or the lots? Yeah. So I could take this very same house, this very exact same house, and put it where I used to live in Florida. And this house would be $650,000. That's just because price per square foot in that specific area, it costs that much to buy a home. The market dictates the price. It has nothing to do with the size. It doesn't have to do with materials. It has to do with the location, how much it costs for the land, and what the market is in that specific area that determines the price.
Boom.
Did I say that right, Travis? You want to add anything on that?
Real estate and fastballs. All about location.
Oh, God. That was a really cheesy analogy.
You're
Real
welcome.
estate agents, man, they're the tackiest people.
And fastballs and pitchers.
Isaiah has a question. It says, what are your common bills that cannot be transferred over until your name is on the deed of the house? What are your most common bills that cannot be I don't understand the question. Do you understand the question?
I think they're asking, so like the power bill, the water bill that cannot be transferred. Bill.
Yeah. Louisiana is completely different than the rest of the United States. So if you're like trying to catch me in a riddle, not that I'm wrong, it's just, it's going to be different here. We have the way that we have, it was something called naked ownership, forced heirship. So if my husband was to die, his portion of the property doesn't go to me. It goes to the children. It goes to my kids. So they have that portion, that 50% is split between the two kids. So they each have 25% of the property, all property, and they own it if he was to pass away. So, yeah. So
they're moving back in.
Yeah. Yeah. They can, and like, it's, some people have it confused. They think they can kick mama out of the house, like, yeah, we own it now, mama, you can get out because you only have usufruct on it. I'm like, no, that's not quite how it works there. She has to agree. She has to agree for you to kick her out of her own house. You can't just walk in and say, I own it now. Daddy's dead. It's mine. Nope. That's not how it works. People believe that. So I didn't pull that out of thin air.
Yeah, that's why. Okay. So can you, obviously with a will, you can override that, if you will?
Yes, correct. Now, if you have a proper will that's been notarized and everything else, that's what most people do, is they get a proper will to make sure that like everything has gone to the correct people. But a lot of people don't, like, there's things that happen. You just don't, no one expects at 42 that you're just going to keel over dead, like there's a lot of people at the, in a younger age, you just don't think of a will. And so that's why local law is set up that way. It's terrible too. It takes a long time. Byron Thomas says, question, when banks go under, do you know when in the business day is taken by the FDIC?
Like, does it take over at noon or something? Is that what he's asking?
How many days does it take before the FDIC takes over? They have to request it, right? They're like, we're going under. We need the FDIC to cover these depositors, right? Isn't that how it works? They got to make the call.
Yeah, I think so. And I think the regulators hopefully are not completely caught off guard. But when banks, I don't know, that's a great question. How that works technically. That's an interesting.
Did they have like the red phone? They call up and they're like, "Hey, the ship is sinking." Oh, and look, Eddie's got a question. He has an answer, man. This is why you have a producer.
Yes, I love it.
When a bank fails, accounts are frozen while the FDIC takes over operations and restores account access by setting up a bridge bank. Typically only to the insured amount. Yeah. So with this bank takeover, they let people take out all of their money. The federal government guarantees all deposits in Silicon Valley and Signature Bank, but that is not the norm. Yeah. So if you had a $5 million in there, they covered it. And they were like, but we're not using your money. We're using other money. Like, we have it in our super secret account in case of like stuff like this happens. It's not your money. It was never from the taxes.
Yeah.
It's our super secret place. Don't worry. It's okay.
This will not hurt inflation.
No, it's not going to affect you at all. This process takes a few days. And during that time, business owners need to quickly assess, get their assets, assess how much money is tied up and what business functions are impacted, just such as payroll and accounts payable. Yeah. Yeah. So they got to figure out who's been paid and when they're getting paid and how much are they getting paid and can we make our payroll? And yeah. But once you call it FDIC, just know you've thrown in the towel. You have no say in that bank anymore.
Yeah, I wonder how many people worked at SVB. I
think they only had like 2 locations or something like that, 2 or 3 locations. And like the normal everyday Joe isn't walking there going, I want to start a savings account for my grandson. No, that isn't how that works. He's like, I got lots of money in Bitcoin. I just started up this really rad NFT Bitcoin thing. Yeah. I want to set up an account. I got 10 million in Bitcoin. I would transfer over. And they're like, yes, come on in.
Into my FTX account. Where was that guy? Barbados or whatever? Where was he? Yeah, he was hanging out. Yeah.
Flame Fred with a $10 super chat. Thank you so much. I appreciate you coming in and giving us a little $10 super chat. Travis, awesome. If people need to find you and everything you need to know in Oregon, how can they find you on the old interwebs? You got a YouTube channel.
I do. It's at T Modison. I do have a YouTube channel. I'm working on relaunching it too. So subscribe now and hit the bell so that when the new videos come out, you'll be like, woohoo.
I know that guy.
Yeah, it's me. And yeah, so that's a great way to do it. And then you can also, my website is travismadison.moveoregon.us. You can go and you can search homes in my area, whatever.
Oh, look, Eddie's even showing them how to hit the all button. Look at that. That's so nice. Eddie's so good.
That is good, Eddie. Way to go. Thank
you,
Eddie.
Eddie used to have a channel. He ran with a stick.
I like it. I'd subscribe to that.
Yeah. Thank you to all the moderators that came out this week. I appreciate you always keeping the chat clean. That is always amazing. Thank you, Travis, for being a part of this. If anybody's looking for a real estate agent in their area, if you're not looking in Oregon, and you can call Travis, in Oregon, but if you're looking anywhere else, you can go visit my website at KristinaSmallhorn.com. Go ahead and pick one of those pink buttons and fill out the referral form. Make sure you leave your phone number for all that's holy. I got one that didn't put a phone number and did not put the correct email address. I could not get back at them. And do you know that it has eaten me up all week? I'm like, they're going to think I didn't want to talk to them. And that is not the case. That's not the case. You didn't give me the right phone number or the right email address. You didn't put the phone number down. And I want to help you. I can't help you. I don't have enough information there. So make sure you fill all that out so I can give you a call. Travis, I actually call everybody that fills out that form.
That's really awesome.
Yeah.
That's awesomely awesome.
If you're looking to, I don't know if you know this, Travis, but if you're looking to listen to this live stream after the fact, we're on all podcasting as well. So we download this and it goes up to all the platforms, the podcasting platforms, and we upload it there so you can listen to it in your car or on your run. And we're on Spotify, Apple, Apple, Apple Podcast, Apple, and you can listen to us there. So
that's awesome.
Thank you, everybody. Thank you to our super chatters today too. I appreciate you helping to support the channel. Appreciate everybody coming out. There was over 400 of you today. I appreciate that. And Travis, I want to say thank you to you again.
Yeah, it's always great to chat with you. And it is going to be a wild week in housing.
Mm-hmm. Yeah, look, Sarah Mason said that she had been following us for 3 years. Original real estate agent videos are very helpful. Now I'm over 242,000 subscribers on YouTube. It's true.
Yeah, way to go, Sarah Mason.
Yeah, go ahead and dance now.